Hello. I want to thank you for meeting with me today so we can discuss something that is really important to me. And it should be important to you. And it should be important to everyone. Um, I know this may be a touchy subject. However, the reality is we're all mortals and we're not going to live forever. The fact of the matter is tomorrow is promised to no one. And in order to protect our loved ones, we have to have some type of a security in place. I like to call that security life security, of known as life insurance. What is security? Security is the degree of resistance to protect you from harm. It applies to any vulnerable, valuable assets. What is that valuable asset? The valuable asset is you. If something tragically happened to you and you're no longer alive, your family may be forced with a large financial burden. And the way we can assure um, their financial future is protected is through the use of life insurance. Life insurance is important because it protects your loved ones from the unknown of their financial future. There are many costs that can happen after upon your death. Those costs can be burial costs, estate taxes, legal fees, outstanding debts, cleanup fees. Um, you want to have educational expenses for your children paid for upon your death once they get to the age that they are going to college. So life insurance is very important, and it will give your family protection if something were to happen to you. In the insurance market, there are two major types of insurance. The first is term insurance, and the second is cash value. Term insurance is pure life insurance. It's normally the main advantage is it gives you the lowest premiums, but it does come with a term. Those terms are for a certain amount of years. Once your term is up, your time expires and you do have to renew. Your term policy you can choose is one to up to 30 years. You can choose a policy for a 10-year term, a 15-year term, a 20-year term, or a 25-year term. A good advantage of this policy will be your premiums, and the only bad thing about it is the older you get, the higher your premium will grow. So your premium price will grow with your age. There is no cash value at the end of this premium, also, and we're going to get into that. The cash value policies that we're going to talk about, we're going to talk about whole life policy. We are going to speak about the universal life policy and the variable life insurance policy. The whole life policy has a fixed premium, so your premium will never go anywhere. It will always stay the same, and your policy will not term like the term life policy is for your entire life. Those are the great advantages of it. Um, there is a cash value at the end of the policy, which means you are able to sell your policy at a discount while you are actually alive, and get the money from that policy at a discount amount, or you can sell a policy at a reduced settlement. So if something's going to happen to you and you're terminally ill and you only have 6 months to a year left to live, and your doctor can provide information to that, you can actually sell your policy at a premium at a reduced amount, and that money can go to help pay for your medical expenses and help you with your family expenses also. With the universal life insurance policy, like it is for your entire life, the premium is fixed and it's flexible. So if something financially happened to you, where you lose your job and you don't have the money to pay your premiums, they are willing to reduce your payments and make it more flexible and more feasible for you to do. This policy also has a cash value, which will allow you to settle out on the policy, or sell the policy at a discount. Now, with the variable life insurance policy, it will last for your entire life. It does come with fixed payments and flexible payments, just like the universal life policy, and it also has a cash value. The advantage of this policy, they allow you to choose where your money goes when it goes into your savings account. With the cash value part. So if you want to invest in a certain mutual fund, they do give you the power to pick the investment funds to invest in with the variable life insurance policy. Now, with these policies, the way we figure out what you need to protect your family is mainly based on 5 to 15 times of your earnings. So, for an example, a person is making $52,000 a year. They would typically need anywhere from $260,000 up to $780,000 in coverage to pay for expenses, mortgage, bills, future educational expenses for their children to go to college, and any dependent expenses that's going to occur with the fact that you're no longer here anymore. What I did for you was I did investigate some of the best insurance policies that's around with the best companies. You want to make sure the most important thing is to choose a company that has minimal risk of financial instability and are financially strong with excellent ability to pay the claims. You want to make sure the company is still around 20 to 60 years from now, whenever your death happens and your policy matures. You want that company to be around and to be able to pay that. I did find out some companies that do have excellent ratings. The rating companies like Moody's and Standard and Poor. Ratings of at least A plus plus. The three companies I did look into for you that are the three top ranking life insurance companies out there right now. It's based on the ratings. It's MetLife, John Hancock, and Prudential. So I hope with this information that I gave to you today, it's informative to you and it's going to help you make the best decision to choose the best policy. And I hope you do understand life insurance is very important for the protection of our family's financial future. Thank you.